Right, hello and good day everyone, welcome back. So over the last 2 days on Bitcoin, there's been quite a bit of action, creating multiple expansions higher and then retracing and then just sort of back and forth with bullish action, which might seem chaotic and a bit random, but I think overall this is actually quite a bullish sign for Bitcoin, and particularly what's happened overnight, New York time. I think this is setting the stage for at least a bit of a run higher. I'll talk about that a bit at the end of the video. Uh, but I just want to go over Monday's high, explain a bit how we changed market structure and how we made our way down, creating Monday's range and running through it below to tag sell side liquidity, right? Then creating a bar model and eventually um, making our way up, right? So here on Monday's high, I'll just show you the basic criteria we had for the change in market structure. So Monday's high. So step above here, clearing out old buy side liquidity. Move your way down. So this is not the break-in market structure, right? But it's this one here. So this sets the tone for the break-in market structure essentially. So as you have displacement low here, you have this displacement, which is the first criteria. It breaks through an old low, right? Old swing low. So it does that, and right, you start to make your way up, and you break through equal highs, take in buy side liquidity, and on the 15-minute you take the 15-minute fair value gap, right? We have a look here. Sorry, wrong place. There we go. Okay, so there's your fair value gap. Right, so you take buy side liquidity above these relatively equal highs into the fair value gap, and you set the stage for the move down. Right, so if you follow my Twitter, you'll probably saw that I was pointing this out as it was happening. I'll show you what I mean. All right, so at the time I was pointing out that we had the relatively equal highs here, and that we had external range liquidity, right? Because when you create that swing high and the swing low, you created this range. Okay, so you already so what you're looking to do was tag the external range, and then you were looking to come back in, right, and tag these lows. Just so happened that we just had a massive sell-off, and we just went straight through it, which was fine. But the general idea was there, right, because we were looking to short up here, and as I was saying, from external to internal range liquidity run. So this is theory and practice, which I was outlining a little bit before the time, right? So, and I think, yep, so this was just an update on that. Okay. So what I said next was to study notes considering the occasional premium discount areas within the high time frame range. Right, why I was saying this is because um, because we had essentially created this this imbalance on our way up here. It was likely to be rebalanced, right? So I was telling people to have a look at the high time frame range, which was Monday's range. So there's Monday's low and Monday's high. So this was your high time frame range, okay? And obviously you're in a premium, and you expect to rebalance this area of the chart, right? Because as we taught, it's offered only one side to the market here, so you're looking for the market to come back and create equilibrium. So that's what happens, and you paint over this price action again. Okay, so essentially what you do is you run the lows of this range, and you run all this sell side liquidity. Okay, tagging on the sell side liquidity, create a buy model, which I won't really go into that right now, and make your way up. Okay, now this is for me, which is quite the interesting part. So here you have New York afternoon low, and you have the evening's high right at 4 o'clock, right coming in here about 4 o'clock, just as New York closes. And so this was your range. Again, I mean, this one of particular importance, right? This imbalance here. This was always a target for the market to trade back to. And this is why I had on here this range, right? Afternoons low and afternoons high. So you trade, price sells off, rebalance. This is the main imbalance here. Targets the swing low, okay? And coincidentally, the bottom of the, we touch that the VWAP, and we make our way up. So this is pretty crazy price action. It's not letting anyone make money. All those people that trailed their longs here are getting stopped out. And all those that are joining in on the shorting get destroyed straight away. Okay, so but where does price come back up to? So let me put on, yeah, I'll just put that on, that's fine. So as price makes a low at the bottom of the web, comes back up, it tags the last high, right? So what do we have going on now? We have the creation of equal highs, relative equal highs, 3 points, 1, 2, 3. Right, so this creates the new range, right? Because you've got a low here and we've got a swing high here. So this is the new range. So anything below the 50%, right? You can denominate it by this line here. It's going to be a discount market. Anything above is it's going to be a premium market, right? Cool. So at the same time, let me go down to a 3-minute chart because this is where the fair value gap is. At the same time, what do we have above us right now? Right, we have equal highs. It's going to be a draw on liquidity. This is going to be a draw on liquidity. And I'll just delete this for now. These equal lows. This is going to be a draw on liquidity. All right, and we expect the market, it's possible that the market comes down and if it attempts to rebalance this fair value gap. At the same time, it would be tagging sell side liquidity below these equal lows, 1, 2. Okay, but overall, this is really bullish for Bitcoin. Okay, so because this is the first time that we've really seen this intense rejection, right, as price attempts to go back down to the median, right? Absolute, just massive rejection. Okay, well, we haven't seen that since. I mean, I can't even remember. Look how price just makes its way dandly down here. There's no attempt to bounce back or anything, Um, Same if we go back to here. Same if we go back to here. So this is really the first time, in my opinion. Same as we go here, 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 here. I mean, look at all the examples, okay? This is the first time price is refusing to go lower. Okay, so this is what? This is a shift in market structure. Okay, so I think that's sort of where we stand for now. And I think what I'll do is I can show you a trade I took as price came up here. Okay, because I'll show you my Twitter at the moment. This is what I'm thinking. So this is what I'm thinking. Okay, we come back, take the equal lows. and go up higher. So this would also be, now if we fulfill the scenario, if we take the sell side liquidity first and then buy side, um, it's going to be extra bullish. This will give us extra reason to think that we're going to be repricing a bit higher. So this is also the power of three concept taught by ICT: accumulation, manipulation, and distribution. Right, so as we're accumulating positions here in this area, move down is a form of manipulation. All right, to get everyone maybe a little bit bearish, take some sell side liquidity, and then continue the real push as they distribute their positions up higher, right above the equal highs, and above Monday's high is a target. So Monday's high is a target. These relative equal highs are targets, and this overall higher time frame high, okay, is a target. Then above there, we're also going to have on the one, we're going to have this fair value gap, the big fair value gap above us. Okay, something it's going to be something to look out for. Right, so I think that's what I want to talk about now. So I did take a short up here. Maybe I can show you quickly. Right, so why did I take this trade? Is because we have equal highs above us, and according to the range, we're in a premium market. So I'm waiting for lower. Yep, that's all.